So I often get asked the question of how is asset management different for ultra high net worth clients versus people maybe still in the accumulation phase? And actually, it's really not that much different in how you manage assets. There are probably maybe a few more opportunities available to people with $10 million or more in assets under management. But really the basics are the same. What the difference is really is an asset protection. So usually ultra high net worth clients are going to have more complicated tax issues. So as planners, we're focused on tax strategies and how that needs to get handled for them. So not just necessarily income tax preparation, but tax planning, meaning where assets go, what the tax consequences are, where can assets sit for tax protection going forward. And it can be, if a client is winding down their business or winding down business activities to go into more of a passive retirement mode, then there could be some tax strategies to be deployed to mitigate taxes, where a person who's more ramping up is going to be very different in the tax strategy. We also have a lot bigger focus on property and casualty, and that seems kind of maybe boring or intuitive in that, oh, well, yeah, you have insurance, but insurance is built differently because when your net worth is above 10 million, a lot of umbrella policies limits are at 5 million. So you start working into more of LLCs, how you structure who owns things, what activities is that client doing that bring the biggest risk. So all that falls into the planning process. And then we have ultimately estate planning. So how can we pass these assets on to the next generation with the smallest tax impact, especially if the client is above the exclusion, and we're going to have a large tax bill coming. So all these things are fairly straightforward to tackle. It just takes a lot of time and understanding what the client goals and objectives are, and then kind of reverse engineering it from there to figure out what the tax and asset protection strategies are. Ultimately, when you're working with ultra high net worth individuals, they're busy. They have a tight time schedule to focus on. So what we find is we spend a lot of our time executing things for them up to the point of maybe a signature, and basically sit down and say, okay, we all agree on the strategy, we execute that strategy, and then we circle back around to them and say, okay, we've executed the strategy, we need you to sign here or meet this attorney at this time, and we start putting all things back together. A lot of times too, it's coordinating with people that already are working with them. So they might have a family CFO or someone in their family that is kind of running their day-to-day or in their business. And so we'll coordinate with them a lot, especially with nonprofits. Families that have nonprofits, we might contact that person, the nonprofit directly, again, with the mission that we set up with the ultra high net worth individual. But again, planning the basics, the asset management, it really shouldn't change that much. Hard assets, so investing in real estate could be a little different. Again, it goes back to asset protection, right? Forming LLCs, making sure property and casualty is set up properly. If there's aircraft involved, making sure that there's an LLC holding the aircraft in case there's an accident. We have more protection from media and things like that. But ultra high net worth families do have unique needs, but ultimately it's going to be really focused around asset protection, where the assets under management, the how we invest is really not that different.